Okay guys, I'm going to show you how to scalp a market using fibs.
Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I'm the big fella Scruff, and sitting next to me is Wonderwing, who was wondering why the hell I did a night shift last night, because we both knackered this morning. So knackered, she's only just got up, because we were up at 2-3 o'clock this morning trading the Asian session. But as I like to help the guys as well, I wasn't going to do a great deal this morning. I've been paid quite well for this week. I thought it'd be nice just to show you a quick scalp. Get in, get out, and then go about your day. Very, very simple. Let me flick it over onto a bigger screen and I shall show you. Now, if I strip everything out, so we've got nothing on, it's a clean kind of arena. There's a couple of things that is nice to put onto a chart to give you some bounce points. Now those bounce points are the daddy levels from the day before. So you can put in the low, the open, close, high, and the midpoint. Now this will give you a quick snapshot arena of what's going on. And if the price is coming into a said level, it can also show you a stall point, because the price will react in and around these areas. Now I'll put the middle in a dotted line just so that I can identify it. But there we go, right? So we're going to drop it into an hour's chart. And we're actually just looking at market structures. And sure enough, there it is there. It's respected that level. We can see it. Now, if you're going to scalp with a fib inside a fib, what you want to do is you want some more levels from the leg prior. All right. So we are looking at this point. We don't quite know it's finished, but we know that one has. So this is going to give us the defining points that we're after. Right. So if I put that from point to point, I can now see exactly where the market's trying to probe to and where it's going to stall. Okay. So these give us good levels, which are here. And then what I'm going to do is I'm going to drop it into a 15-minute and use a fib to enter into the market. Right. Okay. So they're the key areas that I want. I've got points of attraction. I can see it's coming in off this drive, and it looks like the signs of some form of a retracement. Well, if that's the case, how are we going to capitalize on this? Well, it's very simple. Give me a second while I just switch on my other screen. That's it. Right, we're going to drop it into 15 minutes and we're going to look at the drive that we think is complete. Well, it's this one, right? So we're going to drop the fib into the fib, pull that down into there. Right, it's now giving me entry, exit, entry, exit. There's the entry level, the 23. So if I drop a quick order onto that, just above there, boom. And I want 50% of that move, which is approximately there. That's it. Job's done. What I've essentially created is good attraction points. In fact, we can go a little bit higher than that. We can push that up to there. Why? Well, if we're looking at it, and I drop this down into 5 minutes, just so that I can see it even cleaner. What we have is I can see the drive, right? It's gone in, happy days, right? See the drive. I can see the stall based on a key level, which is here. Now I'm looking at attraction points. Well, those attraction points are these blue ones that I've just put in, but I want to stay inside a trading arena, and that's this dotted line here. So what else can I look at? Well, there's a swing point here. All right, I can go with that. There is, let's see. Well, that's sustained. We've already drawn that in. I was looking to see if there's any kind of power shift candles. Power shift candle is an overextended candle. If I push this back to the hour, I'll be able to explain that. There, that. So it's called an overextended candle or a power shift. It just means that there was a single direction and it was excessive. Well, if it's excessive, it'll run out of steam, and that's why the retracement is very good. Now, the criteria, you need a stall point, which is why we looked at the level. And then you also need a high probability in targets. So what's that? Well, that's fresh air. You want nothing between you and your target. Well, from that level to that dotted line, there is nothing. So we just have high probable targets within it. Now this one's, it's a little bit small because you want to have a half decent return. I mean, what's that? That's 9 pips. There's 50% of that move, which is 22 pips. And then if you take it up into that one, well, that's about 28. Right, okay. Now what have we got in our favour? If I get rid of that now that I'm in, well, I can also see a lower level down here. Okay. I don't want the price to go beyond that. If it goes beyond that, then I'm probably on the wrong side of a trade. And that could be quite dangerous. But what I can do is, I can use that to my advantage by staging in down here, because I'm not fully exposed here. I've only just put a small position in. I can put up to 5 positions of a fiver into this thing quite comfortably. And then I can work the arenas, and then I can work my way out of this. So that's what I'm going to do. I'm going to watch to see if it runs up, but I'll also stage down to this point. If I'm wrong, I'll start looking to get out. But if I'm just got in a little bit early, I can capitalize on that move as well. So let me play this out and I'll come back to you at the end. Okay guys, so that's it. 15 pips, reasonably well targeted, and it should have paid me half decent. So as we can see, nothing running. I need to get rid of that order. It's one of the good reasons why I flick through this, because there's a few times that I've actually left an order pending, forgot about it, And the bloody thing's come down and picked it back up. And there you go. 76 quid for 20 minutes work, half an hour's work maybe. I can live with that. All right. So there we are. Clean, clean. Job done. So since yesterday, we've made over 800 quid. You know, just by doing that same thing. Looking at the market, building up a plan, sticking to a conviction, and then carrying that conviction out. And that's trading. It really is trading. The difference between lots of money and not so much money is just your account size. You know, if you're only on £1 a point, well, it was 15 quid, but it was 15 quid more than you had. If you're on a £5 a point, like what I've just been on, well, obviously it's a little bit more. Simple stuff. I never worry about money, guys. I only ever worry about the process that I'm going to go into. I know where my entry points are. I know where my pain thresholds are. I know how to manage from that entry point to pain to get me out of trouble. And that keeps my percentages really high. In fact, I'll show you something because I'm on doing a prop fund at the moment. And I'm actually doing the hardest one there is. It's the one with the lowest drawdown. So I've got to be careful about what I do. And I'll give you a quick snapshot. So bear with me. I'll flick this back over. I'll put it on the biggest screen so you can see it. There we are. This is the 5%ers new dashboard. If you're interested in the 5%ers, there is a discount link below. But basically, on this, I only have a tiny drawdown, which is 360 here. Now, I have to build that up. And as you can see from this account, I've never been into drawdown. Not at all. You know, from day one, that's it there. Off it's gone. I've stayed above the line. Now, I was desperate to get this to 50% today. But I'm at 49%. Shucks. That's a shocker. Actually, hold on. We might actually be in. We're not far away because if I pull my MT5 down, you'll see I'm actually in profit on cable. It's pulling backwards. Should I kill it? Take the money? No, we'll let it run out. But I've already been trading and I traded the same situation what you've been doing, but I was doing it the other way around here. So off pennies, I've still made, well, 22 quid off tiny position sizes. Now, if I come back and you see my average position size for this account, it's 20 pence here, 20p. Okay. But what I also pay attention to is my profit factor. Because if I get my profit factor right, it means it keeps everything else in check. Well, I'm at 5.5. That means I'm incredibly profitable. Because if you hold that across there, does it tell you? No, it doesn't. Basically, if you're over 1, you're profitable. Well, I'm at 5.5. I've taken 137 trades at 91.9% hit rate. Art of trading. Trade management is what will get you through it. Now, there we are. Still pushing up. Could have had some extra pennies. But you've got to be sensible. Went from a clean entry point. Sensible target. Job done. What's your job for today?
Making coffee.
You got nothing on again?
I have got something on.
She's got no clothes on, you know, boys
Hey,
and
I've
girls.
been up all night.
Aye, but not in a good way. Right, and she says I've got to go on holiday, which is a good thing. So we're going to be booking that this afternoon. So if you're stuck, I'm very easy found. I do answer all the comments, so do comment on the video if you're stuck. All the support, much appreciated. So as always, guys, trade well, keep your risk managed, but above all, do what you love. And the money will follow. See you all in the next one.